I've built a $15 million real estate portfolio by buying real estate in Toronto. But in 2019, I started buying real estate in Calgary, and I still am. Check out my video now to find out why. Check it out. Welcome to Real Wealth Real Estate with Alex Wilson, broker owner of Remax Wealth Builders Real Estate. So on today's episode, I wanted to tell you guys or talk to you guys about why I'm buying real estate in Calgary. So since 2019, I bought 3 properties in Calgary. So first off, I'm going to give you a little more in-depth knowledge of myself, so you can understand how I ended up going in this direction. So um, as I said, I'm broker owner of Remax Wealth Builders Real Estate. I've been selling real estate in Toronto for 12 years. Number 1 Remax agent in Ontario for individual transactions in 2019. Number 13 individual agent in Canada in 2020, and number 34 agent worldwide in 2020 as an individual. Was inducted into Remax Hall of Fame and also awarded the Remax Lifetime Achievement Award at 35. I turned 40 this year, which we've discussed in other videos. But more importantly, when I started investing in real estate, I did it in Toronto in 2012, and my first condo I bought was with a deposit of $39,300, and I've now turned that into really nearly a $15 million real estate portfolio, 14 condos, a high park triplex, and an apartment building in Hamilton. And I'm very transparent on everything that I own. So those are the people that are watching the video today, the video version of this. On screen, I have my entire portfolio of real estate that I own. And I always talk about real estate being a long game. So the current market value of my entire real estate portfolio is nearly $15 million. But in 30 years, that portfolio will be worth over $36 million. How do I know that? Well, I just apply math. So I apply an annual compound growth rate of only 3%, a very conservative 3% growth rate. Why I give an illustration to this to everyone is because I want people to see the value of holding real estate over the long run, to get you guys in the mindset before I talk about an entirely new market. So I'm kind of training your brain right now, going, okay, you buy real estate, you hold real estate, it's going to generate significant wealth over the long run. As we've talked about many times before, we're dealing with 2 aspects. We're dealing with a finite time and finite asset class, which is real estate. There's only so much land. So also what I do is I show you, we have that nasty word inflation, but I show that over a 30-year period. So that $36 million portfolio really, well, what is that in today's purchasing power? So I calculate that. What that means is $36 million in 30 years is worth $21 million today. So why is all that relevant? Well, in 30 years, my entire portfolio is paid off because my amortization periods on my mortgages are 30 years. So that means I go from a $15 million portfolio today with mortgages to a $21 million portfolio that's fully paid off in 30 years. Isn't that incredible? And then what I look at is, well, what is my rate of return on that portfolio? So let's assume, let's put a financial planner hat on. It's like, what kind of rate of return am I getting on my stock mutual fund portfolio? Well, let's just apply a 5% rate of return. So 5% rate of return on a nearly $21 million portfolio. So that's today's purchasing power. That's what you're getting. That is over $1 million per year. I'll be able to generate over $1 million per year cash in my pocket by just holding on to real estate, buying, leveraging, holding. The tenants pay off my mortgage. When I look at it, I want to protect against inflation, that word again, so I reinvest 2% of that. So realistically, I'll take nearly $625,000 per year out of my portfolio. And because I've protected it against inflation, I have generational wealth I can pass on to my children, gift it to a charity. These are all options that by making decisions today for myself in 30 years. And anyone can do this. So I created a chart because you may be thinking, "Whoa, my God, I can't $15 million portfolio. I can't do that. That's too much. That's stressful. That I can't wrap my head around that number." Well, I've broken it down. If you have a $1 million portfolio in 30 years, the inflation adjusted value of that portfolio would be 1.4 million. And guess what? It's been paid off because the tenants have paid that off. A 5% rate of return on that is $70,000 per year, but I recommend a $42,000 payout to protect against inflation. A $2 million portfolio, well, that'll give you $140,000 per year, or $84,000 after I adjust for saving some money to make sure the portfolio continues to grow. So these are little bite-sized things that you can do, and that's how you can build your own pension fund with real estate. Now, again, you're like, Alex, you started off talking about, well, Calgary. Well, why buy Calgary? Well, the reference why I'm buying in Calgary is that in 2012, when I first bought real estate in Toronto, my first condo was $267,000 and it was cash flow positive. I can't do that anymore in Toronto. I can't get cash flow positive opportunities with a traditional 20% down payment. Those days are gone. I fully believe in the Toronto market. It's just going to be a market on appreciation. It's going to be diamonds in your portfolio, crown jewels in your portfolio, the blue chip of your portfolio. But where are you going to generate cash flow in a market that has potential to grow and grow significantly? That's why I went to Calgary. So in 2019, Calgary hit my radar. So I started doing my research. So why Calgary? Well, these are things I didn't know. It is the most livable city in Canada for the last 2 consecutive years. The most livable city in the world for stability, healthcare, culture, education, infrastructure. Top 5 on the Economist Intelligent Units Global Livability Index, tripping over my words. It's located at the foothills of the Canadian Rockies, one of the most sought after places in the world for people to go visit. Loads of green spaces. And the second, here's the kicker, the second lowest cost of living of Canadian cities and the 9th lowest in North America. So we talk about Toronto not being affordable, Vancouver not being affordable. Where are people going to live? Well, Calgary is a first-tier city. Let's get into it more. It's the sunniest city in Canada, the most extensive outdoor pathway for biking in North America, and ranked the second for the healthiest lifestyle and life satisfaction of major cities in Canada. So I'm second most affordable city in Canada, ranked second for healthiest lifestyle, the number one city in Canada to live in. Okay, I didn't know these things about Calgary. This is getting interesting to me. These are things that are going through my mind in 2019. Then, as I mentioned before, they have the Rockies at their doorstep. What does that mean? You have Banff National Park only an hour and a half away. 5 world-class ski resorts within 2 hours. Over 200 hiking trails in Banff National Park. This, again, is a sought-after worldwide location that people come to visit in. And that's a real 1.5-hour drive. It's not like you have to wake up at 2 a.m. to get to Muskoka in 2 hours. No, you can get there at any time in an hour and a half to Banff National Park. Okay, so a lot of good things looking to live in the city. But let's actually look at the numbers. So when we talk about population, we're looking at a city that is growing, in population. We've seen positive population growth 2019, 2020, and into 2021. And it's a city that has money. So Calgary has the highest millionaires per capita of all major Canadian cities, and Calgary represented the highest wages and salaries per employee in the country. So I have positive population growth, and we're in the business of investing in roofs over heads. So I need to see positive population growth, and I want to see that people can afford the roofs that I'm buying. Well, highest wages in Canada and the highest per capita millionaires per Canada. I'm like, okay, well, Calgary actually has money. And when I looked at Stats Canada and I looked at growth projections over the next 2 decades, this is where things started getting mind blowing. Alberta's population is set to increase by 48% over the next two decades, versus Ontario's population which is set to increase by 24%. So it's going to grow at double the growth rate of Ontario. And then when I looked at the numbers of the physical numbers of Alberta compared to British Columbia, so currently British Columbia has 600,000 more people than Alberta. In 2 decades, Alberta will have 400,000 more people than British Columbia. There's going to be a net swing of 1 million people going from not from directly from British Columbia, but there will be a net swing of 1 million people from a population-based standpoint. So I'm like, wow, Alberta's growing the fastest in the country for population. And I'm in the business of investing in roofs over heads. And where will we expect the most population growth? Well, it's going to be in the economic capital of that province, which is Calgary. And speaking of it being an economic capital, it's the fourth largest economy in Canada for cities, after Vancouver, after Montreal, after Toronto. Its economy is bigger than the economy of all of Saskatchewan. Its economy is bigger than all of Manitoba. So Calgary is a major force in Canada when it comes to the economic output, the GDP of the actual city of Calgary. It's behind Toronto, Vancouver, Montreal, and we know what the pricing is in those cities. So those were a lot of attractive things. But the interesting thing about Calgary is that its price growth hasn't followed the price growth that we've seen in Vancouver, Toronto, and Montreal. And there's a reason for that. The reason for that is the price of oil fell after it hit a peak of $100 per barrel in 2014. So the price of oil fell. So what happened in 2017? Well, 2017, that's when layoffs started happening. So you had mass layoffs in the oil and gas industry in Calgary. So if I have mass layoffs in my largest industry in a city, well, that means prices are going to go down in that market. So because I had those mass layoffs in a specific industry that dominated the market at the time, prices went down. But as Warren Buffett said, buy low, sell high. So what we're looking at, what we're doing is we're buying at the bottom of the market. So new condo sales prices have dropped 21% since 2017. So we've seen a market where prices actually went down. This is like the only market in Canada that I can get this opportunity. On top of that, we're also looking at diversification. So, sorry, not diversification, distribution. So getting into oil and gas, because a lot of people will bring up, okay, well, Alex, didn't they just cancel a pipeline? Isn't oil and gas dead? So what you have to understand is a lot of these things are headline grabbing. You got to really look deeper in the statistics. So Keystone, which was the pipeline that was canceled, that was already canceled before in 2015 by the Barack Obama administration. The capacity for oil to go to the US, we already have enough capacity to send oil to the US. Our issue is that Alberta is landlocked and the US is our largest customer for oil. It's because we can't get the oil out easily to other markets. Canceling the Keystone pipeline wasn't a big issue because we already have enough capacity to satisfy the American needs for oil into the future. So all of their oil needs through our current existing and building up of infrastructure of our current pipelines, it's already been met. So we don't need the Keystone pipeline. What we do need is the Trans Mountain pipeline, because that will take us away from being basically a sole source supplier of oil to the US, in that if there's shocks to the market, we'll see bigger impacts to the Alberta oil because we're only selling it to the US. What's going to happen with Trans Mountain, which as Canadians, everyone here owns, the federal government owns it, they bought it, and they put it under strategic importance, and it's under construction, and it's scheduled to complete in 2023. That's the one that matters. Why does that matter? Well, that's going to increase our oil exports by 13%. And that is going to go to international markets because that is going over the Canadian Rockies and it's going to be exported by tanker out of the Vancouver area. So now we're able to reach the emerging markets, which are in desperate need of oil, which would then allow our oil to trade at a price closer to the worldwide market price of oil. So to give you an example, in 2020, when we saw the price of oil fall out, our oil was selling at 50% less than Texas oil because we're only selling it to the US. Now we're able to sell it to more markets or get more of oil to the international markets because we're increasing the capacity to other markets. That's what we need. Distribution, better distribution of oil. But don't worry, all my investing in Calgary is not based on oil and gas. Oil and gas is only a backbone of income coming into the province. I'm not relying on it for growth. I'm looking at other areas. And that's where diversification comes into play. So Calgary ranked in the global top 10 most attractive cities for workers. Calgary has the highest proportion of STEM graduates of major Canadian cities. That's degrees in science, technology, engineering, and mathematics. And they also have low-cost office space because their vacancy is at 27%. That may sound like a negative to you, but it's a positive. Why is it a positive? Well, as I said earlier, that backbone. So Calgary was built on oil and gas. In 2014, when oil was at $100 per barrel, you saw a lot of development happening in Calgary. You saw a lot of office development happening in Calgary. When layoffs happened and the price of oil fell, you were left with excess office space capacity. And obviously, we just had the pandemic as well, which impacted office space tenancy rates. So what has that done? You have AAA first-class office space, but you're able to get it at a fraction of the cost. I mentioned that STEM graduates, that Calgary has the highest proportion of STEM graduates of all major Canadian cities, degrees in science, technology, engineering, and mathematics. What other industries are those good for? Well, technology. The technology companies are coming to Calgary. So there are 435 technology companies in Calgary. 3/4 of them are startups. There are more than 2,000 open tech jobs in the city, and a record 44,500 Calgarians are working in tech right now. This is the growth sector of the Calgary economy. And why does that office space matter? Well, going back to it, office space in Calgary's downtown leases for $17.50 per square foot. If I compare that to Toronto, well, Toronto's double that at over $35. Vancouver is over triple that at $44. Even Edmonton is more at nearly nearly a quarter percent, not a quarter percent, nearly 25% more. Calgary has affordable office space, and did I mention that 3/4 of the 435 technology companies are startups? Well, what's happening? Well, we're seeing those startups hit unicorn status. So what does unicorn status mean? Well, unicorn status means that they've hit $1 billion valuation. So we see right here again, you can't see on for those that are listening, you can't see on the screen, but just give an example. Benivity was one of the latest unicorn status companies that hit in Calgary. It received a $1.1 billion valuation, and that was in December 4th, 2020, in the heart of the pandemic. And what happens is that when these companies hit unicorn status, it attracts more investment capital coming to the area because, like a professional sports team that is scouting talent, and when one team hits in an area of scouting, then you're going to have all the other teams come because it's a copycat game. If you start seeing companies hit billion-dollar valuations coming out of a certain market, you're going to attract more eyes to that market, and you're going to have more investment capital going to that market looking for the next great billion-dollar valuation. And Benivity wasn't the only one. You also had Solium Capital, which sold to Morgan Stanley for $1.1 billion in 2019. And there's a deal in 2020 between Calgary-based medical research firm Harvest Therapeutics and San Francisco biotechno company Genentech that same year. And what happens? So not only do you have those private equity, those investment bankers looking at the market, you also now have the original founders flush with capital that are then investing in their friends' startup companies because they're like, hey, Mr. Black over there, they have a great idea. They were just lacking funding. Well, now I'm flush with capital. I'm going to invest in their great idea. And when you start investing in those startups, they started hiring more and more and more and more employees. And that is where we're seeing these companies grow. So here are an example of some companies. These are things that are happening right now on the ground. So Simon had fewer than 20 employees in the spring of 2019. Today has more than 200 employees and moving to 79,000 square feet and looking to hire another 200 to 300 people in 2021. Halcyon outgrew its cramped office space in Blackfoot Industrial Park last year. It went from only 3 staff 5 years ago to 68 employees now. Plans to have 150 employees by the end of 2021, and they just signed a 20,000 square foot lease in the Millennium Tower in downtown Calgary. LodgeLink, they'll require 300 new technology-based jobs over the next 5 years in Calgary, and they'll require 50,000 additional square feet of office space in Calgary. So we're seeing these startup companies grow from 1 to 2 employees to 100, 200, 300 more employees. That's where we're seeing the growth in Calgary. And it's not just those startups that are seeing the opportunity as well. We're seeing international companies starting to pick Calgary as their headquarters. Not Vancouver, not Toronto, but Calgary. So CloudExa, ESQ's new Canadian subsidiary, they have offices in Silicon Valley, India, Mexico, Singapore, and United Kingdom. They chose Calgary to open up their Canadian head office. Infosys, one of the largest global IT consultancies in the world, they chose Calgary to open up a new hub in Canada. 500 jobs. That was announced in March 2021. Emphasis, another massive global IT consulting firm, they chose Calgary as a place to open their new Canadian headquarters. And they're going to hire 1,000 new tech jobs over the next 2 years. RBC. Now, we're not dealing with an international company, but RBC has a massive tech division, especially with fintech, which is what the banks are heavily investing in now as you have new competition coming to the traditional banking sector. RBC is bringing 300 new tech jobs to Calgary in its newest innovation hub. RBC is looking to create a technology ecosystem in Calgary through work integrated learning. So we have massive, massive, massive companies that are choosing Calgary as their base of operations. Now, why are they doing that? Well, I didn't base all of this on this is only happening in Canada. Guess what? This already happened in the US, and we're just lagging behind the US in this transformation of these cities. So if you look at Silicon Valley, you have an exodus from Silicon Valley to Texas. Well, why are companies leaving Silicon Valley to move to Texas? Well, they're fleeing high taxes. Well, how does that relate to Alberta? Well, Alberta has the lowest corporate tax rate in Canada. There's no land transfer tax or development charges in Alberta. And there's no provincial sales tax in Alberta. So Alberta is the lowest taxed environment in Canada, similar to Texas. Expensive housing. Calgary has the second lowest cost of living out of all major Canadian cities and the 9th lowest in North America, similar to Texas. Great affordability in Dallas, Houston, Austin. And we've seen great growth in the valuation of those real estate markets. And also government regulations. So Texas doesn't have the same red tape that California has, where Silicon Valley is located. The same thing in Alberta. Alberta has the money to spend to attract new industries and keep corporate taxes low. Because remember that backbone word again, oil and gas backbone. I'm going to show you an amazing slide coming up in a few where it shows you the enviable financial position that Alberta finds itself in. So already when the pandemic hit, they slashed their corporate tax rate because they can. They have a $175 million commitment to the Alberta Enterprise Corp for innovation. So that's to foster these startup companies. There's no rent control in Alberta. Alberta is your capitalist province of Canada. So talking more about the companies that are moving operations away from Silicon Valley to Texas. So you can see the same thing that's going to happen in Canada. You have HP, Oracle, Tesla, Dropbox, all brand name companies that you've all heard of. We're going to see the same thing happen here. Again, Vancouver and Toronto, always going to be there. But Calgary's been underappreciated for too long. And that's where the replacement cost alone is going to push people to move to Alberta. So I talked about that enviable financial position that Alberta finds itself in due to its backbone, its oil and gas. Well, what oil and gas has allowed Alberta to do is save its money. So if we look at what the net financial debt in Canada is per capita in every province, the average is just over $10,000. Ontario is nearly $19,000. That's the debt per capita in the province of Ontario. For that's passed out of public debt. What does Alberta have? Well, Alberta is less than 2,500. So it's a quarter of what the average is in for Canada, and a fraction of what the net financial debt burden is to every Ontarian. So they have the ability to increase their debt. They have the ability to spend because they're in such a low debt situation as they are now. So you will see Alberta grow at the fastest net financial debt per capita. They'll have the fastest growth rate, but that's because they should be spending right now because they have the ability to, because they've saved for the rainy day. The rainy day is here now, and they're going to be investing in other industries, other sectors to bolster their economy. And because of the debt of these other provinces, they won't be able to match the incentives that Alberta is able to provide to businesses that are looking to operate there. So as I said, lowest corporate tax rate in Canada, no provincial sales tax. These are things that you can't do in Ontario. So they are a pro investment community. There's no rent when I'm looking at investing my real estate there, and this was mind blowing to me. So there's no rent control in Calgary. There's no foreign buyer tax in Calgary. There's no land transfer tax in Calgary. There's no provincial sales tax in Calgary. There's no development charges in Calgary. And they've just signed that $10 billion stimulus package, including reducing corporate taxes. And we've seen this when we've been selling projects there. York Towns was a project that we sold in June of this year. Townhomes, we sold 100 units there in 1 month. We were selling townhomes in the high 300s, that if these were in Toronto, they'd be over $1 million. Savannah, similar thing, another townhome project, 80 units in 1 month in August. And these, if they were in the GTA, these would be over $1 million. So they're available at a fraction of the cost. And guess what? They're cash flow positive. So you're able to buy these assets, hold on to them, and while you're waiting for them to go up in value, you're going to be getting a positive cash flow. And when they go up in value, then you take equity out and then you buy more. Take equity up and buy more. And as I showed you at the beginning of this presentation, in 30 years, those mortgages are paid off. These assets have gone up in value, and then you just live off them as your pension fund. So that is why I'm buying in Calgary. I'm buying in a market that's low. I'm buying in a market that has the highest growth rate for population in Canada. I'm buying in a market where I can get positive cash flow. I'm buying in a market where I'm going to be making money on both the cash flow and on the appreciation. That is why Alex Wilson is buying real estate in Calgary. So I hope you guys enjoyed that presentation. If you have any questions, reach out. Check out all my videos. Remember, subscribe, Alex Shea Wilson, my YouTube channel. Check out my podcast, Real Wealth, Real Estate with Alex Wilson. We'll see you next week. Talk soon. Bye-bye.